First article today, some millennials, Gen Zers, not you, plan to...
Almost could have been me, but no.
Some millennials and Gen Zers plan to tap into retirement savings to buy a home. They really shouldn't, an advisor says. So, nearly one-third of aspiring home buyers plan to pull money from their 401k plan to help cover the cost, according to the Real Financial Progress Index by BMO Financial Group. Millennials and Gen Zers are more likely than older workers to say they will pull from retirement accounts to buy a home. And while 401k loan might be a better option, doing so entails its own set of risks, experts say. Brian, there's a lot in this article, but let me get your take right up top.
So, I mean, right off the bat, I actually have 2 clients that are pulling from their 401k to complete their closing
right
costs
now?
and down payment. Yeah. So they're 2 brothers. They're purchasing together, and I actually helped them walk through the process of, giving their 401k company a call to let them know, hey, we're going to be, taking out money to be able to, pay for our closing costs or down payments. One of the things that I did notice is that they requested, the loan estimate, the documents, and certain documents to verify that you're using the money for the purchase of your house. So
the retirement fund or the manager, the fund manager, or whoever they're contacting, saying, "Hey, validate that that's what you're using it for."
Exactly. Yeah.
There's people right now, just so you know, in watching this on their phone or their tablet or TV, pulling their hair out, like, "No, don't do that."
Yeah.
But okay, continue telling this story.
So I look at it like, I think the younger generation understands that they have a lot more time to go in the workforce, so they could pull from it now and they'd say, hey, I'll replenish it later.
Okay.
Whereas I feel the older generation probably cringes at this because that's like to them untouchable and like you shouldn't do that. Whereas the millennials are like, well, hey, I have that opportunity to tap into that money. I'm able to utilize it now, although it's gonna might hurt me in the later times of my when I retire, but they rather have the house right now.
So are you thinking? So you're saying that it sounds to me like part of your saying is it's philosophy.
Yeah.
There's a difference of opinion generationally, but you're also saying, well, not saying, but I'm inferring that you're saying this is their chance. Like, well, I'm gonna get a house. I got to do it this way.
Yeah.
And I have to do it. This is where my money's at right now, because that's money that would maybe be represented in savings if it wasn't in the 401k.
Yeah.
I would be. I'm guessing, but. It's safe. It's a safer guess, I guess, without knowing these people being surveyed.
Yeah.
So okay, so they're doing that because they want to get into the market philosophically. Like, hey, I got plenty of time to play catch up, if you will.
Yeah, exactly.
But it's the key through the doorway of homeownership.
Well, it's either I have to come up with all that money elsewhere through savings, which is already difficult as it is for the younger generation. But then again, I think it does fall a lot under your financial habits and what you do day in and day out with your money, your budgeting. Because I mean, we have seen other examples where the millennials come up with their own down payment. But in this instance, I feel that if the opportunity of getting a house to not getting a house is tapping into your retirement, I think a lot of people are going to weigh that and say, hey, like, I want the house. I'll take that investment right now out to be able to get into my property. Down the line, they can utilize the house to replenish that 401k or pay it back, because once you take it out, you do have to pay it back. There is a certain, tax hit that you get on it. I think it says 10% plus a fee for, taking out the money. So as long as you're able to repay that back, and you have a strategy to do so, I think it's a smart idea, because no one's going to give you those thousands of dollars up front unless you save them or you have somebody in your family that, wants to give funds to you for your, your purchase.
Well, yeah, I mean, so first of all, I think part of this is we've already been talking and covering about millennials buying homes in untraditional means, like with other friends or with a significant other that's not yet their spouse, also with other family members. So I'm not entirely surprised that they would also do this as well, which is, again, a non-traditional way towards taking money that's supposed to be for your future to get something for yourself now. Yes, there's a tax consequence for early withdrawal penalties. It's basically generally early withdrawals from retirement accounts can trigger taxes and a 10% penalty unless the account owner meets a listed exception. And it does count for taxes because it's basically income that was deferred taxes. So not taxed on the way in, it's going to be taxed on the way out. Qualifying first-time homebuyers may be able to take up to a $10,000 penalty free. And then with Roth IRAs, owners can withdraw their post-tax contributions at any time without penalty, again, because they're post-tax. So, yeah, I mean, it's basically either savings or savings, right? Yeah. Savings via savings account or savings via 401k. But it seems to me like these things go hand in hand, right? And so the general subset of non-characteristic fundamental kind of traditional ways of buying home are just, that's what this is this is part of too. I feel like it's just all packaged in with all the other stuff we've been talking about.
Well, I think that, based on everything that's happening, the opportunity arises that this is now a way of you being able to get into your house if you have that money, for saving through your employment. But like I said, it's really tough for somebody right now to, let alone have the income to be able to approve for a house at a starter price, for a starter mid-priced home. Being this young, I think leveraging that 401k, although it might be looked frowned upon by financial experts because, you shouldn't touch that, I still think that right now in this present instance, it's an opportunity that if you have it, great. If not, well, you better hope that your family or somewhere else you're able to get that money.
Well, and one of the people that's quoted in the article even says the key thing is to ensure that you pay that back over time.
Yeah.
And so, but this is paying that back in addition to now having a house and a mortgage payment. So, it's not always that the house is going to be more expensive. In most cases, it is, just from the data we have and we collect all the time. So there's that issue. But then also trying to pay yourself back, quote unquote, your future self back. I understand that the argument being made is this is a palatable option for most people because this is where they can get the down payment money from. How confident are you, in people being able to also pay themselves back and their future money back that they just took out early? Is this something you think, would you do this? Would you do this? Would Brian sitting here today do this if this was the difference between you getting in a home or not getting in a home?
I think if I have the plan and the right strategy to be confident to pay it back, I would do it. And as long as I'm able to pay it back and not just kind of shoot myself in the foot, because obviously you got to replenish those funds. I think it's an opportunity and something that should be considered if you don't have those funds accessible. I would do it.
Mm-hmm.
I would do it.
Let me ask the question. Let me ask a follow-up question because I think it'd be maybe even an easier yes. If you used that to buy a place that had cash flow, and it was a duplex, triplex, or a fourplex, would you do it?
Yeah, because now it pays itself off.
Now pays itself back.
Yeah, exactly. Yeah, pays itself back.
If you're disciplined and you have a plan, then you can take back some of that cash flow and put it back towards the that amount you took out.
And I think that's the biggest thing of this, that if you are able to structure it in the right way where you're not going to be bleeding down the line, I think it's a smart move. But it really just comes down to the person, their habits, and who they are and how they basically live their life. Because maybe it's not right for everybody. Maybe those forced savings for some people, they do require them to stay there because they don't know how to really manage their money in the smartest way. But I think that the people that do take the chances also understand that they have to take that commitment to pay it back.
Yeah, so part of me, when I was preparing for today's show, I was thinking about this, and often in 2023, we were citing that we would see creative solutions come to the market from the banking industry, from municipalities, from builders, and all sorts of sectors of real estate and finance to make sure that homes could still be bought and sold and that kind of thing and financed. Now, this has been around a long time. This isn't some new thing, but I think that the trend is that the next generation coming up into homeownership is now tapping their retirement in order to do that, which, again, I've known people that have done that too. And it's always for a variety of reasons. It's not just because they're desperate. It is more of a tactical move. And let's be honest, if you are putting money away into a 401k, you're already thinking about your future a little bit. You're already committing dollars today, or I should say you're setting aside dollars that you could be spending today, $4 you want to have available to you tomorrow. So while this is not a new idea, I'm not so totally surprised that millennials are doing it too. But I do think it runs concurrent with everything else we've been talking about with the creativity of the market. People are just going to figure ways out. Well, it's the only way it is right now.
And also, I feel like generations before, millennials, Gen Zers, they only had one vehicle of retirement. And that might have been their pension, their 401k, where now I feel millennials see it in different ways where they can, because you see it right here. It goes tax-free but comes out taxed. So you're still going to be paying some sort of tax when you bring it all out. And I don't think in this type of world and where we're at now, a 401k is going to help you get through your whole retirement life. So I think there must be, more supplemental types of retirement pays that you would have to build in nowadays to be able to live comfortably in those years. Because we see it that people retire, they finish their life working for a company that they worked for their whole life, but still aren't able to pay for the cost of living because of the retirement not being enough. And these are true stories that we probably know people that are going through this that have to pick up a job around 65 because they still don't have everything from their retirement, which is now the younger generation sees it hey, that's just one avenue. I can leverage this to then get in my house, because I think or I feel that the people that understand how real estate works knows that, hey, as long as I get that one property, that's going to unlock a lot more opportunities.
Yes.
And you financially become smarter in the way that you look at everything, because now it's more of a business move rather than a like emotional move. Whereas now you're okay, well, I could take these deductions. I understand how money works, how finances work. So you put yourself in a better position to move forward, building generational wealth through different avenues.
So what would your advice be? Let's say to someone who is watching this and they're a millennial, what would your advice be to them? If they're sitting here and they're thinking, hey, I'm going to take money out of my 401k or my IRA, what would you tell them they should do as part of their strategy?
So I would honestly try to, if you can't come up with the money all yourself, at least try to come up with as much as you can from your own pocket. And then just make sure that when you're calculating, that you're going to take out that certain amount that you're going to use, know that, you're going to have to pay it back, and also allocate that in your monthly payments for everything that you're going to pay, along with, your property taxes, homeowner's insurance, and all that stuff. And just kind of factor it in that so that you could pay that back sooner rather than later. And then your money could still start accumulating, how it was before you took it out. Yeah. But I just really think that shouldn't be your first option if you have other routes available. You know, so I think it's a great place to be able to access the funds if needed, but I think that shouldn't be your first resort.
Yeah, so I think there's a couple things to think about. Number one, take the long view, the big picture. Like if this is something you're going to do, then make sure you're committing to this place for a specific period of time, longer than, let's say, 3 or 5 years. Or in that same 3 to 5 year window, please have a financial plan for that place to cash flow, turn into some sort of offset for you, so you're not just eating that amount every month and then also trying to pay yourself back. I would also suggest pay yourself back as fast as possible.
Correct.
In that, and then if you are trying to do this so that you can get into real estate and stay in real estate for a long time, then stick with your intention. So if that's going to be your position to do that, and you're making such a big decision in order to do that, then stick with it. Stick to your guns.
Yep, I think so.
And be confident in your choice.
And I mean, everybody's going to have different routes. I just feel that, there's more options coming out. So I think even with like down payment assistance, there's a lot of different programs that are now rolling out, which I think is very interesting. But then again, it's not for everybody. Sometimes, you just have to take an alternative route. But, I think it's really case by case.
Yeah, no, that's a great point. Case by case, as always the case.
Yeah.